Welcome to our webinar, Building the Next Billion-Dollar Business Within, how Schneider Electric's growth engine launches market-shaping ventures like grain ecosystem. We are very excited to have you all join us. All right, our moderator today is Rob Midalis, board member in residence at Mach 49. In his role, Rob partners with corporations on the mothership level, looking to grow and scale their businesses. He focuses on impact as the driving factor in entrepreneurial success and passionate advocacy for climate and sustainability-centered growth initiatives that both serve the planet and create enormous financial wins. And with that, I will hand it over to you, Rob, to introduce Mach 49 and our amazing panel and dive into today's discussion.
Thank you, Taylor. Pleased to be here in so many different ways. Mach 49 builds growth engines with and for our corporate clients. We focus on this by doing venture building, venture investing, an array of things within all those activities, focused on growth that matters, focus on execution. For me personally, joining Mach 49 has been an enormous pleasure and stroke of good fortune. My entire career before Mach 49 was spent as a CEO, an investor, a board member, attacking clients like Mach 49s. And, we would sit there on Monday with our few dollars and our few people, and we'd say, man, we're going to kill them. There'll be roadkill on the way to our greatness. And then on Tuesday, after getting our head beat in, we'd say, well, maybe if we're nice, they'll buy us. And then on Wednesday, we'd be back to being, arrogant and excited. The opportunity I've been given in the last couple of years by adding these board member opportunities, where I join boards of these impactful ventures at great companies like Schneider, has just been incredible. It's given me the opportunity to understand at an intimate level the extraordinary opportunities those companies have to dominate markets in the future. And it's also given me even more of an appreciation at the extraordinary challenges they sometimes create for themselves in pursuing those opportunities. And I'm delighted to be here with Gregoire and Ryan. We've worked together and closely on a number of these topics, and successfully today are talking to you about both Schneider and grain. Gregoire and Ryan in a little bit will describe their own companies and circumstances, but a few moments of personal introduction. Gregoire's job as VP of Business Incubation at Schneider is an extraordinary job. It's an impressive job. And it's also a job that is filled with fantastic challenges. There would be times, Gregoire knows this, at the end of our meetings, we would leave and I would bang my head against my wall in frustration over the enormous complexity of so many different constituents that need to be managed. Gregoire and people like Gregoire in these roles have business unit leaders who have their own plans and agenda and thoughts around short-term and long-term and rewards and offense and defense. And then there are intrapreneurs and entrepreneurs like Ryan, who know that markets don't care about business unit priorities. They care about impact. And then there's the venture capital of it all that people like Gregoire and Gregoire have to deal with. Venture capitalists being a very quirky combination of preening self-regard, territorial ferocity on how they get paid, and brilliance around how time, people, and money come together to create outcomes, fantastic outcomes. It's just extraordinary. And so while I would often have these headbanging moments where I would also be grateful that I no longer am a CEO charged with getting a busload of stakeholders to the right destination, I would then go back with Gregoire and he would have this incredible equanimity and would just say, okay, so here's who we do next. Here's who we call next. Here's what we do next in order to activate the best of my company for the best of these opportunities. Really an extraordinary opportunity. And I know Gregoire is going to bring that to life in just a little bit as well. Ryan and Grain, Ryan and his team, and Ryan in particular, enormously motivating for me personally. There's this false binary when it comes to climate and sustainability, usually phrased as a hostile question. Are you making money or are you saving the planet? The answer to that question is yes. And embodying that question, heart and soul and factually, is what Ryan does best. Ryan's team and Grain are embedded in carbon offset markets a terrible, awful marketplace today, mostly fueled by the charade of do nothing and pretend legitimization. It's an awful market. And what has inspired me is from the beginning, Ryan and team, they knew the macro challenges. They knew how important it is to get these markets scaled and scalable, and also knew how important it is to be granular and specific about science-based, fact-based, high-integrity carbon assets that remove carbon, that find a market, and that find markets in scalable ways. Just an extraordinary journey that I've been delighted to be a part of. And so I'm looking forward to all of the conversations we're going to have today. In the end, what we're talking about is seizing this advantage. We call it the mothership advantage. How do you actually seize that advantage? And I love the word seize because it's not just going to happen. Gregoire knows this, Ryan knows this. Our audience wants to know it. You have to seize these advantages from great companies like Schneider. They're there for the taking, but it's complex. It can be challenging. We activate that by venture investing, venture and building. And together with Schneider, Mach 49 has worked a long time, since 2018, on a variety of different initiatives. Today, we're going to discuss two different things. The venture competition known as Dare to Disrupt. That particular competition yielded a number of enormously successful outcomes, one of which is the grain incubation and soon or current spinout of grain as a standalone independent company. We're going to come back to this slide in a number of different ways at a number of different times. These are some of the metrics on Dare to Disrupt, the venture competition that I just mentioned that brought us all together. This is, if you just look at these numbers, there's just wow after wow after wow in these metrics. Gregoire and team decided to call forward the energies of Schneider to come up with impactful new ventures that they could add to the arsenal of things they do to create impactful growth. 80,000 views, 2,500 workshop attendees, enormous mentoring, 242 teams participated from 44 countries. 24 of those were shortlisted, 8 became finalists, 3 became incubated, and grain here today, one of the successful ones. And all 24 of those teams, to my eyes, all 24 of those teams that were on the shortlist were worthy of incubation and support. An incredible array of experiences. We will come back to this in a little bit, but this is the landscape that brought us all together. Gregoire, Ryan, and myself, and we'll go through this landscape together. Gregoire, I'd love it if you could give a little color and background from your view about Schneider. Update our audience on how we should understand Schneider, and we'll dig in some more.
Yeah, with pleasure. And thanks, Rob, for the invitation and giving me and us the opportunity to share with the broader audience the very highly qualitative relationship that we have built over the past, 4 years, 5 years together. Because clearly one of my biggest lessons learned over these past years is quality prevails over quantity. Really, it's a pleasure. It's clearly not a one-off approach that we had over these years. And really thanks for the highly qualitative activities, job contests, and incubations that we have run together. So really pleased to be with all of you today. And my pleasure also and my honor to introduce Schneider Electric. And the way we are introducing ourselves is an impact company. I would not claim that we are a B Corp, but we are clearly an impact company. And this is not something that we are just announcing. We have been ranked among the most sustainable company over the past 10, 15 years. We have been releasing our sustainability index over the past 10 years, demonstrating how the group was deeply engaged into this sustainable path. And this is right now the #1 criteria allowing us to attract the best talents, especially the younger generation that are looking for mission purposed activities. So very proud of being part of this company, which is also very, Rob.
Oh, yeah, and I'm just sorry, Gregoire, I was so excited about this. This impact focus is extraordinary, welcome, and vital. one of the ways, or two ways this played out in our relationship together that I want to share with the audience. One is, personally, before joining Mach 49 as a board member in residence, I started to despair over the conduct of companies and markets and their ability and desire to drive impact. I'm a clean tech 1.0 survivor. I saw the worst of those opportunities. And it was only when I got to add the boards I've gotten to add through Mach 49, like working with you, that I've been massively rejuvenated, that I'm seeing incredible people with incredible assets attack impact as an opportunity set. And one of the ways it played out for us, and Ryan, you'll recall this, when we were on the ground working on climate and sustainability opportunities, we knew that Schneider as an impact-oriented company was an asset we could almost take for granted. That, in other words, when we knew we wanted to pick big fights, when we wanted to have significant impact, we knew that Schneider would have our back, that they would not tell the startup, hey, back off a little bit, it's too abrasive, it's too disruptive. We knew they would want our best shot at impact, and we just knew from the start that was in place. It's an incredible asset. Ryan, does that ring true to you? Gregoire, your thoughts as well?
Yeah, Rob, absolutely. I think, when we first met, I don't know if you picked us, if you were assigned, but we were super happy to have you in the first instance. And then as we went through the process, you continued to challenge us, go bigger, think about this impact. And when you had a chance to maybe jump off the grain train, you stayed with us because you saw we were committed to impact and how Schneider was willing to support us in that mission. The bigger we thought, the more exciting it got, both for us as a team, as well as the Schneider Electric group that were supporting us through that journey. So thanks for that. Thanks for continuing to challenge, and excited to be chopping this up again today.
And that's really true. And we will have, I think, the opportunity to rediscuss that in more details. But if you really want to build a successful adjacent business to your mothership, you need to have the right stakeholders that would really push this team into, let's say, the real blue oceans with bold ideas that anyway would be supported by unfair asset, expertise, access to customers, because we are operating anyway in the same markets. So Schneider is a sustainability leader. We are doing sustainability, practicing sustainability as a business, especially in the US, in Europe, ramping up in China, clearly. So in terms of P&L, clearly this is one of our biggest growth avenue from far, but it's also the company culture, the DNA of the culture being fully, I would say, balanced with a very open mindset. And I always quote this this example, because even if it's details, it really demonstrates that it's not fully greenwashing, but our executive committee is fully gender balanced. And you do not have, and when I say gender balanced in terms of course, male and female, but also origin. We used to be a French group probably a few decades ago, but we are clearly a global company. Our ExCom is really with people coming from China, from the US, from Europe. Our new CEO is German. You have 50% of females and so on. So that's really the DNA of the company. And that's why with this openness, we are really ready, I think, to tackle bold ideas with bold entrepreneurs and to explore the market that are really disrupted.
That's terrific, Gregoire. And we're going to come to a moment on innovation at the edge where you can describe that for us as well.
Exactly. So I was about to transition there because, even though if you have some bold ambition, you need to have, when it comes to execution, some dedicated resources that are really focusing on driving this innovation. And usually let's say the mothership, the business units are focused through their R&D roadmaps on the next 12, 24 months, and maybe doing some significant M&A acquisitions that can drive, I would say, a different future that anyway are usually quite expensive. So you cannot only rely, I would say, on this organic or acquisition means if you really want to operate in markets that are changing almost every day, every week. So this is a rationale on why we have created this innovation at the edge division led by our chief innovation officer that are exploring all the adjacencies of Schneider Electric. And we have a corporate venture capital fund with now 1 billion euro asset under management. And we are clearly leveraging these financial capabilities to accelerate our incubation. We are also supporting the startup ecosystem with some dedicated resources and operating partner that are animating this synergy, because you know the DNA, the time frame is clearly different in between a large corporate and a startup. And last but not least, that's my pleasure really to lead our incubation practice, because the reality is with a CVC play, you are even with a corporate, with a C, the corporate part of the CVC, you are always targeting, let's say, the 3 to 5 years horizon time frame. In corporate, you have also usually your scenario planning team, or let's say the long-term strategy team, which is giving you what the world would look like or could look like in 5, 10, 20 years from now. But we all know that the best way to predict future is actually to shape it, to create it yourself. And this is where the incubation practice is really very, very meaningful, because we are filling this gap in between what is available now and what is needed to achieve your future vision. And we don't want, from a corporate standpoint, to, let's say, replicate something that is already existing. It doesn't make sense for a corporate to incubate something where, let's say, a seed, even Series A or Series B startup would do something very similar or would do in the next months. Clearly, this is not something that is meaningful. So the capability to tap into the data, expertise, market knowledge that a corporate has, and then extracting, let's say, this gold mine with bold entrepreneurs, and then exploding that into blue oceans opportunity and creating independent ventures that would be VC backed, because it's very important also to operate with a very open ecosystem here. You cannot only rely on few internal resources and your own capital, your own budget. So you need really to create something which is very open by nature. And this is a recipe that we have set in place over the past years with many iterations, because to be also very transparent with you, it took us a couple of iterations to find this balance model in between something very scalable, supported by the mothership, and successful.
Yeah, thank you, Gregoire. That was super. A few points of reflection. Let's see if they're interesting. You talked about adjacency and finding opportunities that fit. I recall a number of great conversations with you and some of our judges on the panel about this question of overlap and also underlap. You know, that there's an art form here where you have to find sufficient overlap to be interesting to the business units and sufficient underlap so that it wasn't crowding their own efforts. And that's as much art as it is science. Any thoughts on that question of adjacency and fit? And Ryan, feel free to jump in as you saw that emerging for Grain as well.
No, I think that's a very, very important one. And that's, I think, the main difference that you would have in between a corporate incubator that is anyway willing to create VC-backed startup and unicorn versus maybe many other incubators, is that you need to walk the fine line in between something that would be meaningful for your corporate, and meaningful in the sense that if you want to give an unfair asset to your incubation, it's because you have subject matter experts that will be able to really scale this topic faster, or that would really highlight the real pain points that are on the market that are still underserved. So you need, if you really want to tap into this topic, it has to be adjacent to what your mothership is strong at. But if it's too close to that, the reality, back to my organic innovation usually the business unit will tell you, okay, I want to do it. And maybe they would be very happy to use your own budgets to accelerate their roadmap. but that's not what you are supposed to do. You are not, and our budget at least is much smaller than the R&D budget of the business unit. So trying to supplement what the R&D teams would do is a nonsense. So you're right. We need to walk these fine lines in between really being not too far, but not too close to the mothership, and anyway, fulfilling real market needs that are untapped with startup, with existing startup. And that's why it ties to my very first comment. We cannot have, with such a strategy, a quantitative approach. We cannot bet on incubating, I don't know, in hundreds or dozens of startups every year and see how things would scale. We are very selective, very demanding, and I think the few key numbers you highlighted that I agree with you are really amazing through the Dare to Disrupt challenge really demonstrate how demanding we can be. Now I make, let's say, a side comment here, and when we were framing this challenge together, we also say, okay, the outcome is not only the incubation and the startup we would create, but all the added value that these hundreds of employees would get all across their journey. Because it's one topic to maybe win a contest, but if all the hundreds of employees change their mindset, change their approach of innovation, get in touch with many other mentors and so on, that's a massive indirect impact for a corporate, which is usually struggling to take the most of their own resources.
Yeah, excellently stated. I see some questions building in the Q&A. I'll get to those at the end. They'll come up there. Ryan, your thoughts on this question of impact and adjacency. From your perspective, building that venture, knowing that you had to create something of relevance with sufficient overlap, but also sufficient distance from the core to get launched as a standalone impactful venture. How did you think about that for yourself?
Yeah, at Grain, when we were coming up with the ideas and really discovering what opportunities there were within Schneider, I mean, I think the magic of the Dare to Disrupt competition is you ask your employees, where are their gaps? And so I remember being in this process, seeing the other shortlisted 24 teams and thinking, oh yeah, hey, we don't address that. That is an opportunity. It's either a big opportunity or that's a good idea. And of course, as Gregoire mentioned, you have to find the ones that are the best adjacency and opportunity. For Grain, we approached it as a tactical decision, right? You can have the best idea, you can have a great team, you can know that there's a good market, but a lot of times, winning comes from partnership. It comes from putting yourself at the right place at the right time for that market. And for us, when we look at the Schneider Electric story, it's first class when it comes to the decarbonization story. I mean, we've been doing it since before it was cool at Schneider Electric. And so when I was in the company trying to say, okay, well, what problem can I solve? Where is there a real opportunity? Where can I lend my skill set and the skill set of my other team members to really solve a problem? It was in this area that I happen to be passionate about, which was decarbonization and the role that carbon removal projects play in that space. So thinking about, we implement electronics at Schneider Electric to help that energy efficiency. It's a great organization in terms of scope 2 emissions and decarbonization, but that last mile, if Schneider's going to put their stamp on a carbon credit or carbon removal credit, they have to be confident in the quality of that credit. And so we really saw that as an opportunity and a place that we could use our unique skill sets to lean in. That wasn't an overlap. It was just adjacent enough in a way that creates value both for us independently, but also for a multinational like Schneider Electric.
And just go back one more. Sorry, Taylor. Just two quick reflections here, and Ryan, we'll get to some of your introduction of Grain. We've intimated a couple of it. Two quick things here, Ryan. I love the way you described the way you approach fit and relevance. I remember one conversation we had. At some point, you and the Grain team developed confidence that, look, we're going to launch this, and it's going to run inside or outside of Schneider. Is going to happen. And I asked you, all right, so why at Schneider? And the answer was great. It's the answer you want every team to have, because you and the team told me more or less our greed for success, because we can't think of a better internal set of assets to give us an unfair launch than doing this right here at Schneider. And it's not because we worked here, not because we have loyalty, we do. It's because we know, objectively speaking, we get an unfair start by being incubated here. And That was an extraordinary answer for me, and all teams need to really think that way. It was great. Gregoire, one bit of reflection here I wanted to make sure we add for the audience as we look at Dare to Disrupt. I learned a lot about the difference between a corporate incubator and the ones I knew before doing all this. And among the differences is that standalone incubators, by definition, have a high fail rate. And they have to be selective as well. The difference is when we, in a corporate incubator, are having a highly selective rate, there are a lot of highly valued employees who need to be communicated with, treated in a certain way, followed up in a certain way to create value from the program, the value you described about all the energy levels. And we had one episode I'll share here. One of our teams, as you recall, got to a well-earned no-go. And one of our fellow board members at that time made a comment that will stay with me forever. His comment was, "This has been the most spectacular training I've ever seen us have at our company." And his follow-on comment was, "I wish every one of our employees would go through this." And that was after a well-earned no-go. And some of that was because of the care and attention spent to this as a tool for the company, regardless of who emerges as an incubated venture. You mentioned that well just now, but I wanted to give that light here. It's an extraordinary asset to think about when you run these programs. Gregoire, did I capture that reasonably in your mind?
No, clearly, and that's why, day one, when we really frame this this contest, I engaged with two exec sponsors. One that was our chief innovation officer. That's pretty obvious. You are running an innovation contest. The second one was our chief HR, human resources officer, because that was really about embarking and demonstrating to hundreds, thousands of employees that there were different way of thinking and driving innovation. And I spent many years in large corporates, and I can tell you that you need to manage the frustration that most of the, or some of the, depending on the corporate you are in, but some or most of these engineers are trying, or offer managers are in, and they would like to do things differently, and they struggle. And so opening their eyes on what you could do differently with different methodology in terms of customer interviews and so on, that go much beyond, let's say, an agile approach, because now, everyone is talking about agile. Okay, we can discuss and debate hours about agile, which is great, no doubt, but that's something pretty different versus creating additional businesses. So going much beyond that was critical. Yeah,
that's excellent. And we'll turn, Ryan, just a second to Grain. There's a great question amongst many from Curtis Mickelson about the value calculus. And Curtis, your question is actually a great answer, that in addition to the results of the impact of Grain's success is creating 10 times the number of innovative entrepreneurial mindsets inside of Schneider along the way. And that is an amplifier, a force multiplier for Schneider. Absolutely a critical part of this endeavor. Well said by Gregoire, and
that's absolutely true. Absolutely true. Now, usually big corporates are very efficient, very lean, very well processed. So everything should be tracked. And one of the issues, to be also very honest with you, is how you really effectively demonstrate that through KPIs, because that's pretty tough. And our answer, very pragmatically, has been twofold. The first one is we have, I would say, or this contest has been able to highlight new talents that were not known by HR, even by their managers, are real entrepreneurs. So, on the HR processes where HRs are also looking for talents to be promoted, to be exposed in other programs, and they are trying to find names, it was a pool of people that has been used down the line. So even if it's not, let's say, a big KPI that you can follow during years and years, anyway, it's a very concrete example of how many project manager, offer manager, and so on have been exposed down the line. The second topic is that's more on the a soft KPI here, but that's anyway very strongly tied if you want to set your own incubation practice in your corporate or elsewhere, which is engaging with 2 exec sponsors at the excom level. Because if you do not have, I would say, this sponsorship, people that are taking the time to understand what you want to do and that are ready to be patient, because all these projects are anyway taking time before impacting, especially a multi-billion dollar company, and especially when these companies are operating anyway independently from the mothership, you need really to have this mindset at the excom level. So my piece of advice to any of you that would like anyway to create that is being sure that you have 1 or 2 is much better, clearly, exec sponsors that are deeply understanding what you want to achieve. So your #1 priority should be to take a lot of time with them to be sure that they would support you.
Yeah, excellent observations. You make it sound so easy, Gregoire. And I appreciate that. But now I go back to my head banging. Ryan, let's switch to Ryan. And yeah, Ryan, as you described Grain, 2 questions came up in the Q&A. Maybe you could factor them in as you go. One, your experience as an employee of Schneider for 6 years before launching Grain, compare and contrast as you describe some of this. And then the second, how do you think about impact and feasibility, particularly in climate and sustainability? I think it was Laura, I can't recall, who asked that question. If you're doing something new, and in climate sustainability, there's a question about feasibility and impact, and how do you bring all that together? I think you guys did it brilliantly, and I think that might serve as a way to focus some conversation. Ryan, give us some background.
Yeah, Rob, I think probably to answer those questions and sort of set the stage, let me start with the incubation and the start of the journey for us. At the beginning of the Dare to Disrupt Challenge, our first task was to form our team. And so the successful piece of that, or the exciting piece of that, is I got to reach out and pick the different folks who I've enjoyed working with, who are experts in their field, and begin to build that team that would work together to work on this competition and this idea. And through that process of going through the Dare to Disrupt Challenge, it was a good learning in terms of structuring of the opportunity. But the real magic happened for us in the next stage. So not only was it an incubation process of 12 months where we really had to be customer focused in the first piece, it was really our opportunity to build our culture. So we went from being in different departments within a large multinational, sometimes grabbing a coffee together, or sometimes being in different continents, to being together for 12 weeks, working specifically on this problem and this topic, being customer focused with, talking to customers directly, finding the customers ourselves, building the different solution sets to the problems that we had identified, testing those problems and coming up with a business case, all in 12 weeks. So it's this opportunity where we had to sink or swim, come together as a cohesive unit and figure out who does what, and really learn what it means to be an individual contributor outside of that corporate potential net of having a dedicated HR or something to that effect. And so for us, it was really the opportunity to demonstrate our ability to work together, and at the culmination of it, present everything that we had built to the investment committee for a spinout. So the comparison from where I was before versus now is I really had the chance in this function to work with customers, to be customer focused, to demonstrate customer focusedness. And for the other 2 teams that didn't get past the incubation stage moving on, for those folks that went back into the company, they're thinking customer first forever. And so it's really a changing experience for all of those folks that went through the process. And for us, it was our opportunity to build the base culture that is Grain today and really set up the product velocity that we've seen, building our proof of concept, going to where we're at today in terms of building our MVP platform, launching with products, testing willingness to pay, and starting to sign contracts. So for us, we started incubation with Jason, Matt, myself, Patricia, who is a carbon expert at Schneider Electric, and Mircea, jack of all trades, expert in finance specifically. We had a really great team to start, and this is the team that's taken it forward to the next steps and put us in a position to know who we are at our core as we begin to add other folks to our opportunity. I think, Rob, yeah, sorry, go ahead.
No, that's right. I want to emphasize 2 things there to that topic of valued employees with emerging and terrific careers, and then the startup. You made 2 comments I wanted to emphasize: sink or swim. you were all very explicit that you were not going to rely on your careers at Schneider to buy you presumed extra support, that you had to show the ability to yourselves and everybody else that you would sink or swim and wanted to. That great entrepreneurial leap of faith around sink or swim, that was terrific. And voice of the customer, right? The intensity of the voice of the customer as the lifeblood of the startup opportunity, it never leaves you once you go through these kind of programs. And you all embedded that really well. Those are some enormous observations you just made. I wanted to emphasize here. I didn't mean to interrupt you, Ryan. I want you to describe grain as well.
No, perfect. And Rob, I think that speaks to the feasibility of the opportunity, is really testing solutions on those pain points, which is what we successfully did when we went for the pitch and spin out. But I think to successfully describe what we do with grain, maybe we take a step back. And let's look at the problem as a whole of what we're looking at in terms of the decarbonization journey. So today, there's obviously a challenge. By 2030, we need to be reducing our output of tons of CO2 by 32 gigatons per year. That is significant. And this is going to take all of us working together to make it happen. And in fact, companies are committing to net zero to reach these targets and make it a fact, make it happen and to save us. But fundamentally, they have three things that they can do once they've made these commitments. First, they can fail to meet those public commitments, which really is a non-option because we all lose confidence and we stop investing in those companies. Second, they can invest CapEx in emission reduction technologies, which can then reduce their footprint, their utilization, and begin using alternative sources of fuel beyond the fossil fuel economy. And third, and I say and because it's not an or, it's and, buy carbon offsets or carbon removal credits in this instance. And it's really important, Rob, just reflecting on something that you said before, is that the carbon offset or the carbon credit that industry will purchase cannot come at the expense of fossil fuels that are emitted elsewhere. And I think that's where we start to get this black and white challenge between, is my credit offsetting a fossil fuel that I should have removed? I mean, let's not kid ourselves. In 2030, we're not going to have long distance shipping containers running on batteries. It's just not going to happen overnight. It's going to take time, and that's fine. But we need a path to get there, and that involves doing actions today, both to manage our business and our carbon footprint at our organization for the technology that we can switch out. But it also means we need to be investing in these carbon removal technologies to help us get that last mile and drive down the cost curve. And, Rob, I think you said something at the beginning around the value of, are you saving the planet or are you making money? And the answer is yes, right? It's a huge market. Decarbonization as a whole, almost $5 trillion in 2030 to be estimated, a lot of estimates even higher. And even the carbon removal market is $70 billion or more in 2030. And so we are excited to be a part of it, providing a technology solution for project developers to get access to this market, know if they're eligible, quantify their removal, and get access to funding to begin producing impactful carbon removal offsets.
And Ryan, just to take a little step deeper into grain, here you have a problematic market because of its conduct, construction, and behaviors and incentives, which is failing to meet public commitments while pretending to meet them, right? The worst of all worlds. And you and the team embraced that challenge and said, it doesn't have to be that way. And we can create science-based, high integrity carbon credits to get us as a planet where we need to go, and we create a business to do that. And I thought you're not just the intentionality of your approach, but to the question of feasibility, you made very specific judgments about where the pain was, how to get quality supply on a scalable way available on a market. And how does that quality supply get there so it can be heard above the noise? How does that quality supply get promulgated globally, quickly, rapidly? I thought some of your instincts around starting point, not just from a macro perspective, but the actual starting point is brilliant. I wonder if you could spend a few moments sharing that with our audience.
Yeah, I think so. My previous role was really one in finance, and so one of the mechanisms that we use to drive behaviors a lot of times are business cases and structured finance mechanisms. And so the market, as the way it's structured today, it's really an economic equation. And if we can find a way to structure the economic incentives to drive the behaviors that we want to see, then we'll see them. When we were doing the investigation, we were talking to project developers, for example, that are working in forestry. What I heard the most is if you can make a carbon ton cost worth more to me than deforesting or selling my lumber, I'll do it. It's very simple. And so we're really focused on how can we give access to these project developers who see it as too costly or too complicated to get access to the market. And can we make there be a business case? And there's a lot of different levers within any business to drive that profitability. And so that's why we focused on doing well and doing good, making it really from a business perspective that we can decarbonize, because at the end of the day, sentiment is great, but once we hit a market downturn, people need to have incentive. And so we need to structure the market in a way that that incentive continues regardless on the way that we're going. And so that's really how we're thinking about it and building the guardrails around it to make that flourish.
Yeah, and you'll describe grain in other places at other times, but as I recall through the journey of incubation and then judging and venture competition, and Gregoire, you remember this well too, by the time we got there with grain and its proposal, what was particularly persuasive was the factual commitment to business cases that would reward high integrity, science-based carbon removal, and the perspective on how a grain scaled platform would create growth opportunities of enormous planetary and financial impact to its participants, and that you were constantly balancing, or better than balancing, integrating impact, planetary and financial. That was never, they were never distinct one from the other. They always were in tight orchestration and still are. Gregoire, did I recall that well from your perspective? Ryan, I believe I did from yours.
No, clearly, that's something which is very, very important. No doubt, and the support provided by the business unit, but the scalability that we see and the synergies, the pull-through that are very different from one incubation to another, because this is also the beauty of this practice, is that you do not necessarily have one model that is applicable for all the use cases in terms of synergies and so on, but always with this capability to create a scalable P&L accelerated by some synergy with the corporate. But right. And that's also anyway one of the key learning in terms of, that's pretty obvious that the time in a startup is not the same than the time in a corporate. So some of the mistakes that probably we did in the past was to create a business case that was too relying on the mothership. Right. And since you have this, let's say, timeline or time issue, you struggle. So I think we need to manage the expectation. The mothership is an accelerator, but it's not the engine itself. The engine itself must be the team, must be the startup. They need to work with other customers in an open ecosystem, blah, blah, blah. So I'm always, saying, guys, the corporate is your accelerator, but if you do not have anything to provide, any motor, any engine, you will go nowhere.
Right, excellent. And we're coming to an end of our organized part. We'll move to Q&A in just a moment. We have a few good questions already teed up. But Taylor brought this up, Gregoire, you started mentioning it. I love the way you just described the question of we're an engine, but not the only, driving source. One of the things we did with all the teams when they would ask Mach 49 in our role as mentors to the teams and guides, how do we handle the pitch along these lines? And our advice was always the same. Define success without Schneider. Define it without them. They're smart enough, expert enough, exposed enough to demand their access to that success, and we'll create a partnership together. Don't rely on it. Don't just walk into it. And our teams did a great job of doing that, particularly the ones like grain that emerged here. A couple of topics in summary here. I'll ask you one or two questions and move in. Disruptive new ventures. Disruption sounds good on a slide, but it comes with angular, spiky, difficult to consume pieces. Nobody wants to be disrupted. Everybody wants the success of disruption. And so there's an art and a science to driving that growth. At Mach 49, we pride ourselves on being a part of that. We touched on some of those things, but disruptive new ventures really need to be understood, as we've discussed here. Talent, vitalization, revitalization. I think we talked about some of that really well, but viewing the kind of efforts, Gregoire, that you build for Schneider as having multiplier effects beyond the individual teams that emerge is really vital. It creates all sorts of connectivity and value added. And then growth capable executive leadership mindsets, often talking about how important it is to think about growth and opportunities the way the best venture capitalists do. Option value, not discounted cash flow. Show up at review meetings, not as division reviews of mature businesses where you look at, row 9 of a 30-page spreadsheet, but where you really dig in and understand impact and the team and the time and the option value of being right. These are the things that have to come together to drive the growth that matters. These are all the things we try together to execute through Dare to Disrupt, and in marvelous ways achieve quite a lot of, and then learn how to do more and better in each of these areas plus. Let's turn to our Q&A. We have 10 minutes left. Let's turn to broader and open Q&A. Let's see. There was a question from Curtis about the 12-week cycle. I'll answer that quickly. The 12-week cycle that was referenced is a 12-week cycle that Mach 49 likes to deliver in these incubations. We have a very specific orchestration of date, time, and sequence about pain and customer pain point and delivery of understanding of the voice of the customer, then storyboarding, idea testing, ultimately into business and business models. So that's a specific orchestration. I'll let other questions emerge as they go. Gregoire, while people are queuing up their questions, I have a question for you. You have to orchestrate a lot of different points of view in your job. Do you ever, just as an entrepreneur, say, I'm going to ignore everybody else, I want this to happen? Do you ever get that opportunity, or do you desire that opportunity? How do you exercise that opportunity to just be you as an entrepreneur as opposed to you as the shepherd of so many different people in your flock?
Yeah, that's a good question. What I can tell you is probably part of the quality of this job. You need to have strong conviction. You need to be stubborn, as an entrepreneur would be, to be successful. So anyway, you are part of a corporate, so there are anyway topics that you can completely not escape from, to be honest. So you need to manage, but also you're absolutely right. If you are waiting for having all the stars aligned, everyone agreeing on a project, it will never happen, never. And I can tell you that, and I will not quote names, but that's
for the next webinar.
But I can tell you that I have many folks that were highly against some of our incubations, highly against some of the projects. And when these projects start to really be successful and they see the value, by chance, it starts to be very, very attractive and so on. So that's anyway, the day in the life of any entrepreneurs. The only difference you have is that an entrepreneur, you're right, can change of stakeholders. If this VC, if this customer and so on is not willing to work with them, they can go to another one. So internally, you need to anyway find who are your sponsors, who are really the ones that are trusting you, the ones that are understanding what you want to achieve, and demonstrating with them that you can build a success story, and based on these success stories, trying to convince the rest of the group. But even with these sponsors, in a division, you will never be able to align all the different sponsors. And even when it happens, the reality is that some of the execs, some of the senior management would change 1 year, 2 years, 3 years down the line, and maybe the new one will not necessarily be supportive. So that's why you need to, that's a continuous journey. And back to the comments, you need to take what you can take when it's available and scale, and really consider your mothership as an accelerator, but not as your only, let's say, stakeholder.
Yeah, thank you. You described so well what makes me want to bang my head against the wall. But yes, these are the challenges. And what has been marvelous for me personally as a board member residence is to learn how Mach 49 in partnership with people like you, Gregoire, and companies like Schneider, how we can, as outsiders, welcome partners and outsiders, be a part of bridging those divides, be a part of accessing the mothership superpowers by navigating all that, keeping impact in mind, keeping Ryan's goals in mind, and somehow moving the thing along. Quick question for you, Ryan, as we go. You are now spun out or spinning out, correct?
Spun out.
Spun out. So you've now at the next phase of your journey, right? From internal venture competition participant to selected finalist to incubate to launch. And now you've spun out and third-party capital is going to show up. So you have a holistic view. This perhaps is an unfair question. Any regrets, or if not regrets, things you wish you knew then in the program that would have made it faster or better for you? Any reflections of that nature? Regret about being in the program, or a reflection on what would have been better?
No, I think, Rob, for me, no regrets. It's the life of an entrepreneur. You keep moving forward. I think we've taken the bull by the horns and had significant product acceleration. We took the time, we took the 3 months to take a step back, really make sure we were understanding the core pain points of the customer. And thanks to you and the Mach 49 team for really helping us through that process and structuring that customer discovery. It really, it embedded that cultural change that we needed to have this product acceleration. You know, after launching, we're about 8 months now post-launch, and we built a team quickly, we built our product, our first version quickly, and we're signing contracts. So I wouldn't say there are any regrets. Maybe 10 years down the line, after our big IPO, we'll look back and we'll say, oh, hey, you know, maybe we could have done this slightly different, but that's probably going to be the color scheme or something else, because we're learning as we go and iterating as true agile entrepreneurs.
Yeah, that's why I love Ryan and all great entrepreneurs. It's only for ex-entrepreneurs like me to think about regrets. Like, while you're in it, forget it. It's just yet another day. It's Tuesday. Just keep on going.
One comment here, well, two comments actually. One, which is really one of our key learnings also with you, and which is super helpful in terms of aligning the key stakeholders, is rather than trying to promote an idea, you know, really align everyone on the pain and the untapped opportunity. And, you know, the session that we are always doing together with key exec and so on this challenge framing session is probably the most important one across this process, to be sure that you would have the right support. Because when people really agree that there is a real untapped market opportunity, they now start to be excited and we can debate on the solutions and blah, blah, blah. But usually the reality that you try to convince people on your solution, and the reality that they are not convinced that there is a pain or a market opportunity. So this challenge statement session is something that clearly everyone should go through, which ties to my second comment. And I was going and reviewing the poll results, which is, if you are, and if I were to change something on our innovation contest, is go more collect the pain, collect the market opportunities, rather than trying to collect the solutions. People are in the innovation context proposing already they want something. And what anyway we did with you, with Mach 49, and we were really focusing the team at the beginning on the pain, on the market opportunities. And then we anyway go through the qualification phase. We did all this customer interview, and you pivoted. And maybe Ryan, you can also explain a little bit how you have adjusted your initial thoughts, because that's a continuous process. So if you try to organize your innovation contest, which is this is the solution we want to implement, this is not the way it works.
Yeah.
Reality.
Excellent thoughts. I'm watching the clock. I promise everybody will end on time. I wanted to emphasize something that Gregoire said, and then thank you both in just a moment, and tie it into a question from Augustine all at once about how do you choose which ones to promote. Gregoire, I think you hit the key when you talked about challenge framing and also impact framing, that the key is to focus on the impact that defines success, the challenge framing that defines how we'll go after that impact and achieve success. That, in other words, all of these issues, all of these challenges, internal, external, entrepreneur, money, they go away because the boss is the impact we're after. The pain points that define how to solve those pain points, to create impact, the challenge framing. These are vital activities because they keep us all in the mindset and the ability to define, align, and execute impactful new ventures. And at the end of the day, that's all we care about, all of us. We want to define, align, and execute impactful ventures. And some of the observations you shared there and throughout, and you as well, Ryan, were great for all of us to understand. That's the goal: define, align, and execute impactful ventures. This has been a great webinar. I really appreciate it. Ryan, Gregoire, it's been a personal pleasure for me to have spent over a year or more working with both of you in a variety of things, and particularly these projects. It's really been special to me personally. I know it's been highly valuable to Mach 49 and our work. I thank you both for your generosity of perspective and time. I thank the audience for being here. You see different ways to contact us, the Q codes, other things, an email to reach us through Mach 49 if you have further questions. I apologize, we couldn't get to all the questions in the queue, but we did our best to get as many as we could. Thank everybody and have a great day.
Thanks, Rob. Thanks, Mach